Can a 5% deposit really change your entry into property, or is it just shifting the risk onto first-time buyers? I'm Tim Graham, and the Property Playbook starts now. Today, I'm joined by Michael Pell, Managing Director of Propel Property, a specialist in small-scale developments. But today, we're talking about the Australian Government's 5% deposit scheme for first-time buyers and whether this scheme is having an immediate effect on the market. Michael, welcome back to the program.
Thanks for having us, Tim. Good to be here.
Always good to have a chat with you about real estate, mate.
It is, mate, it is.
So look, there may be some people that have not caught a couple of your previous episodes, so let's start. Tell us a little bit about Propel Property.
Propel Property helps property investors build profitable property portfolios, given their current situation, whether they're already an avid and sophisticated investor or whether they're a first-time investor. We help them build up portfolios based on their set of circumstances. We have a research team that looks Australia-wide to find the best opportunities for our clients in major regional markets and also capital cities. We specialise in small-scale developments, like you say, Tim, duplexes, single dwellings, adding value where we can. We like to manufacture equity and not just be reliant on the outside market. We get the organic growth because we're going into the right areas anyway, but to be able to get that artificial or manufactured growth from adding value to quality property, we like it. It gets results for our clients. They come back and buy more, and overall we want it to be a really good story where we increase our clients' wealth. Yeah,
terrific. How long has the business been around?
10 years in May. We're going to turn 10 in May, which is exciting.
Congratulations.
And then, I've been in the game since 1999, so
there you go.
Getting a few more greys. I cut it short on the side to get rid of those greys. But look, been in a long time. It's what I know and it's what I love ultimately. And we're in a good spot at Propel Property. Got a wonderful team and happy clients, which is important. And it's a cliche, Tim, in our game, but you put the client's interest first. You make them money as investors, and then by nature, the universe rewards you as a business with a fair exchange. And the clients come back and they pay us a relatively small fee to get it right as an insurance policy to buy in the right area, to buy the right property, to get what's right for their specific set of circumstances. So, no, we love it. I feel like it's my first week every week, even though it's probably my 25th year.
Very good. And you were saying, last month was one of your biggest months ever, which means you must be doing something right.
October was our biggest month ever, and you said at Hotspotting it was your biggest month ever, so we must be in sync, Tim, which is exciting. Well done to you and Terry and the team. You do a wonderful job at Hotspotting. And look, ultimately, you're right. We can't have a business nearly 10 years old. We can't be helping a lot of clients if we weren't putting their interest first and making them money. You might last a year or two, but then you're gone. And fortunately, in our game, and in all industries, there are people that just are self-interested and put themselves first. But ultimately, I think, the universe washes them out pretty quickly.
I'd agree with you.
Yeah.
Now, today, I know you guys specialise in investors.
Yes.
But today, I'm interested to know your take on, there's a lot of media getting around saying this 5% home deposit scheme has really put a rocket up the market. What's your opinion on that?
Yeah, I spent my first 10 years in property with first home buyers, so I've got a good understanding of that beast, and it's a different beast to investors. But look, it's a good question. The first home buyer deposit scheme now means that first home buyers around the country can earn any income. They can be on any income level and they can get in with just a 5% deposit. As we know, Tim, with first home buyers, they're very emotional. They're less generally about the numbers. They're not like investors. So they're wanting to buy their own home. They're wanting to realise the great Australian dream of owning their own home. So they have a propensity to overpay. And if they're bidding like they are now against each other and trying to buy that dream home for mum, dad and the kids and little Johnny and Katie out in the backyard playing cricket, they'll often pay $50,000 or $100,000 more for the same property.
So it's a bit of FOMO in the market.
Oh, there is. FOMO is probably the word. And how does that translate to our clients, to our investors? Well, we're helping our investors get into these specific markets, which are owner-occupied. We prefer to get into those areas anyway. But where we know that a lot of the growth is going to be fueled by these newly entered into the game first home buyers, our investors can ride off the back of that. But we're chatting off air, and you're exactly right, Tim. It's not one factor that's driving the market right now. It's the downward spiral of interest rates that we're in, albeit they kept it on hold recently. I think Michelle Bullock and the RBA kept it on hold recently, Tim, because of this first home buyer scheme. Because this is generating a lot more spending as it is anyway. They didn't need to drop rates necessarily. Will we get some rate drops in 2026? Possibly. inventory. So a whole lot of factors, a bit of a perfect storm for investors. But yes, there's a lot more activity with the first home buyers since 1 October, which is 6 weeks ago.
Yeah, that's right. But as you say, I mean, I think right now in any markets under the caps, you've got renewed interest from investors off the back of a couple of interest rate drops. That's improved borrowing capacities. We've also got in some markets like Brisbane and the Gold Coast that you're very familiar with, where you're getting that lifestyle aspect of people coming in, migration coming in.
Yes.
So as you said very well, it's the perfect storm, and you can see lack of supply is one of the biggest drivers of property growth. So
it is.
It can't be just one thing.
That's right. And the lack of supply, you're right, Tim, is the overarching sort of macro feature that we're dealing with here. Throw in the 5% deposit scheme with first home buyers, a bit of extra fuel on the fire. Throw in the downward rates that have been happening, albeit they were on hold recently, and then throw in increased borrowing capacity, sentiment. Market sentiment's a big one. Expectation. The stock market, any market often relates very strongly to sentiment. How are people feeling about that? Are they buying? Are they selling? Right now, people are buying. People are feeling more confident, and so hence why they kept rates on hold recently, I think.
All right, I'm interested to know, with this, FOMO in the market, and you obviously do like to target those owner-occupied areas for obvious reasons. But how do you help your customers navigate that? Because there's a lot of the time where you're just going to have to say, look, this is what we think it's worth. If someone else is prepared to pay more, then so be it,
We've got to be able to pull it up at somewhere, that's right. We love owner-occupied areas for the reasons that owner-occupiers care more. The values are higher in those areas. It's easy to spot those investment ghettos out there, and there's plenty of different areas around Australia where they're prevalent. We steer clear of those for our investors. For our investors, we want to be one of a few investors in that neighbourhood, in that suburb. We want to be dominated 70-80% by owner-occupiers. They care more. So that's part of the research aspect that we do as a firm. We've got a wonderful research team that scours the nation for these kinds of opportunities. So, but that combined with the add value and the limited supply aspect, we can ride off the back of these new schemes, this government intervention that is actually happening right now to fuel the market. And so, from our point of view, how do we help our investors right off the back of that? Well, we identify the areas where these emotional owner-occupiers, first home buyers are going in, and they're driving the prices from 700 to 800, from 800 to 900 and 900 up.
So you're almost saying that there's a really positive aspect to this for your investors that are buying in the same markets because of the fuel behind the first home buyers driving up prices.
Yeah, I think there is, and we've got to make the most of it. We can't control the conditions, but we can adjust our sales to the conditions. So we can't control what the government does, can we? It's the old saying, Tim, control the controllables. So we are controlling what we can control. We know these first home buyers are coming in and they're charging in, a $900,000 property, they need 45 grand. It's not a lot of money. You can get 20 from one parent, 25 from the other parents, and suddenly we've got our deposit for a $900,000 property. So for us as investors, where can we buy to get in, at these levels and then get the uplift? And no, it is exciting. And we're feeling really confident that 2026 is going to be a huge year in the property game, and that's probably why we're at Propel experiencing some of our biggest months ever with smart, savvy investors coming to us saying, hey, let's get set before then. Let's get set in late 2025, i.e. now, and or let's get set in early 2026, because 2026 there's going to be some real wind in the sails.
I think anecdotally that line that you just used is what I'm hearing the most. I need to get in now because I know 2026 is going to take off. Yeah,
and look, you might say, oh, you're in property 25 years, of course you're going to say get in now. Well, yeah, because when have we looked back over the last 100 years and property prices have really gone down for an extended period? The other thing, we talked about it in a previous episode, but just to recap, is that holding property for the long term, Tim, and having that good debt against an investment property debt, and it is good debt, not bad debt like owner-occupied debt, jet ski, car loan, bike loan. The good debt against your investment property portfolio, holding it for the long term, letting the property go up in value, letting the rental income and the tax benefits come in, that debt actually devalues over time. We've talked about it before, but it's important to recap that. So the debt devalues, the property appreciates, it grows in value, and I think the longer you hold the properties, the better you're going to be in the long term. We all know those stories of people saying, why did I sell? Why did I sell? Oh, the cash looked good in my account, but that's just erosions as far as I'm concerned.
That's true.
Money sitting in the bank.
I've got a side question for you. New build and established markets, right? One of the big things that people don't give a lot of emphasis on when they think about established is they don't understand how much competition's in this market right now. If we look back over the last 10 years, the population in Australia has grown by 4 million people, yet we've got less properties for sale, less properties for rent than we did 10 years ago. So with that in mind, obviously what that means is you've got a lot more competition on each of those listings, and what it means is it's very difficult for an investor competing with a first home buyer in that market. So I've noticed that there's been a bit of a pivot back to new build now that we've seen a lot of the challenges with the builders going broke and supply chain issues. Are you seeing that too?
A little bit, and it's very interesting you say there. You talk new build or house and land package, and you talk established, and that's a very macro way to put it. But where are we doing the new build? That for me is crucial. I'm doing a new build right now in Isle of Capri in Service Paradise. That's not a house and land package, but it is a new build. People often put new build and house and land package in the same kettle of fish. I.e. greenfields areas, endless supply, steer clear of that. For any business or property company to say, don't do established or don't do new builds, I actually just think that they're the doctor that's already got the script done up before the patient comes in.
It's a good way to look at it.
How can they say what's right for the client? So to go back to your point there, the established market is very, very tight because us as humans are impatient, Tim. We want what we want and we want it yesterday. We don't want to necessarily do the old javelin theory, one step back to take 2 steps forward. So we do both. To answer the question, we're buying a lot on the established market right now, and we're very selective with that. We've got some contacts where we're getting off-market, under-market opportunities. But on the market, on realestate.com, on domain, it's hugely competitive, as you've said. But sometimes we'll find a block of land where we can say, hey, if we added a wholesale build to that, the comparables here are $850. We can get our client in for $750. Why don't we take 1 step back to take 2 steps forward, the javelin theory, and have some huge uplift? And we're in Melbourne, love coming to Melbourne. We've got a couple of AFL players, I won't name their names, who are our clients, but one of them ended up over $210,000 up from doing exactly that, from doing a new build with us, but not a house and land package. We went and found the block in the area, and then we added the wholesale build. So I think it's important to make that note of the differences there versus the greenfield house and land packages where there's endless supply to never land versus infill areas, find a block, add the value, create the equity, manufacture that growth for our client.
Makes sense. Well, Michael, we could talk about this for days.
We could. Would you like to?
I'd love to.
I'm available.
They are giving us the wind up. I've got one more question for you finally. If you were an investor navigating this market today, you know that there's FOMO in the market. What's one tip you'd give them?
I would be buying, depending which state you want to buy in or where you want to be, I would be buying in that realm of price point where the first home buyers are in now.
Right.
So in Queensland, sub 1 million, I would be looking at the sub 1 million market. What can I buy as an investor? Because I know the first home buyers are just, it's only been in for 6 weeks. They're just learning about it now. They're just getting on board. So let's buy for $850 and let's have that ramp to $1 million over the next 6, 12 months, 18 months. Or in New South Wales, sub 1.5. So I would be making the most of this new government intervention with this scheme.
It's an interesting take. I really enjoyed the conversation today, Michael.
On you, Tim.
Well
Thanks
done,
for having us, mate.
That's it, folks. That's the play for today. This program's been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.